In this section, we will discuss about the loans and advances. We know that one of the important or the primary function of a commercial bank is the provision of loans and advances. That is, bank lending constitutes loans and advances by the banks, and it plays an important role in the gross earning and net profit of the commercial bank. It plays an important role in the net earnings as well as the net profits of the commercial banks and causes acceleration in the growth and development of the country. That is, these loans and advances plays an important role in the development of bank as well as the development of the economy. And the need for bank credit is accelerated with the development of the economies and complexity. We all know that the bank loans started increasing or it accelerated with the development of the economy, and it provides one of the important source of financing for the various developmental projects in the economy. This bank credit enables individuals and business enterprises to purchase goods or services ahead of their ability or desire to pay. That is, this bank loans enables individuals and business enterprises to purchase goods or services. We all know that we purchases or purchases goods and services by taking loans and other advances. In business, the demand for credit arises on account of the time gap between production, distribution and consumption. Individual make use of the loans, like that business people also make use of the loans, but banks out of the savings collected from the customers meet the demand for credit. That is, the demand for loans are met out of the savings or the deposits by the customers by the bank. And the significance of the bank loans are given here. First one, it is a major source of revenue to the government. It is a major source of revenue to the bank. That is, we all know that the banking development of the banks depends upon the interest rate that they quote from the loans and advances, or it is a major source of income for the commercial bank. Second one, it is the basis of credit creation, and we have already learned that the process of credit creation, and in that this loan is an important agent in the credit creation process. Then the third important significance is that they promote the economic growth. That is, bank credit is significant in that it is responsible for driving the expansion of productive facilities and operation. Then agents of the production. Bank lending act as an agent of production, and by making possible financing of the agricultural, industrial and commercial activities of the country, bank lending facilitates economic development of the country. Further, banks also helps fuel consumption activities by creating constant demand for the consumer goods in goods like a house, furniture, etc. That is, they act as an agent of production. That agent means one of the important agent of production is capital, and these loans and advances therefore act as an agent of the production. Then securities for lendings are given here, and that is, in order to take loans and advances from the banks, we need to keep some securities. And these securities are of two types. One is personal security, second one is collateral securities. Personal security means the individual himself is treated as a security, but in order to consider an individual as a security, he must have good acquaintance. Loans and advances are provided on the basis of the personal security based on the acquaintance as well as the faith of the banking officials regarding the customers. That is, on the basis of the performance or on the basis of the income sources, sometimes the loans and advances may be granted by the bank on the basis of the personal security. Second one is known as the collateral security. Collateral security consists of a variety of assets such as real estate, goods, raw materials, as well as finished goods, warehouse receipts, shares, negotiable instruments, jewelry items, etc. can also be used as security. And the main objective of the bank requesting for security is to reduce the risk of loss in the event of failure of the bank, the borrower, to pay them loans. That is, these securities are taken or requested by the banks in order to cover the risk associated with the failure of the borrower to repay the money. If we fails to repay the amount or the loans and advances, then the bank can attach the security offered by this. And the personal security is the first one. Second one is the collateral security. Collateral securities are in the form of the assets, and the borrower executes the collateral securities in any of the form, the hypothecation, pledge or mortgage. Hypothecation means the loans are granted on the strength of movable assets like inventory, finished goods, delivery vans, etc. Hypothecation means if we keep our security as movable assets that we can take into the bank. Some examples are the delivery vans, and then finished goods, etc. Pledge means the bank allows loans and advances on the basis of the jewelry, etc. If the loans and advances are provided against the liability of the against the security of the valuables such as jewelry or other valuable items, then it is termed as pledge. Hypothecation means security in the form of the movable assets. Then a third one is the mortgage. Mortgage means the loans and advances against the or the in this case the security will be immovable property that we cannot take that asset into the bank. For example, land, building, plants and machinery are the example. If loans and advances are provided against the land, building, machinery, etc., that is termed as, that types of securities are termed as mortgages. Land mortgage bank, that is one important types of the security in India. In India, we usually use for granting loans or getting loans and advances from the bank. That is, there exist three types of the securities. The first one is hypothecation. These are the collateral securities, that is on the basis of the assets. Hypothecation, it is on the basis of the movable, that asset we can take into the bank. Second one, pledge. Pledge means the security will be in the form of the valuables like jewelry, gold, ornaments. Then mortgage means the security will be immovable like land, building that we cannot take to the bank and give it to the bank counter. These types of the securities are known as the mortgages. Then various types of the collateral securities include stock exchange certificate, goods and title of the goods, bill of exchange, life insurance property. These are some of the collateral securities that we usually use for getting loans from the bank. This about the loans and advances here. What is loans, their relevance, and various securities used for the granting loans from the banks are explained.